Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas or market analysis that I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday, provided the market condition is supportive of that. We'll find that market condition out in today's market session. You could also trade them on Friday near the close if you could find them in real time, again provided the market condition was supportive. Using Q systems, you can identify trade setups in 100% real time. How strong was the market in last 12 months? We are nearing the year end and it may be a good time to ask that question. And what we will find out is probably not what the market ETFs tell us. Index percentage of stocks up over the last 12 months. So every index is constituted of certain number of stocks. What percentage of stocks in each of the major indexes are up over last 12 months, 1 year. For Dow Jones Industrials, it is 73% up. Of course, this is the smallest of the market ETFs, only 30 stocks. Nasdaq 100, 63% of the stocks were up. S&P 500, 66%. More broad, S&P 1500, and also mixture of small cap, large cap, mid cap, 58% up. So when we look at the broad index created from small cap, large cap, mid cap, it's not that bullish, isn't it? Bullish, but not roaringly bullish, only 58%. And much broader than even that, Russell 2000, only 46% of the stocks are up in last 12 months. That is in fact bearish in terms of breadth. NYSE Composite 53% up, whereas Nasdaq Composite, again bearish, 39% up. There is something to be read from these percentages. The market is not as bullish internally as the ETFs show. Why? Because the ETFs are market cap weighted. Indexes percentage below 52-week high. So how far below the recent 52-week high? Dow Jones Industrials only 4.62% below 52-week high, and for many of these the 52-week high is actually the all-time high. Nasdaq 100 just 2.98% below 52-week high, S&P 500 2.12, S&P 1500 2.44, and even Russell 2000, which is relatively weak in terms of breadth, in terms of percentage of stocks that are up. It was bearish, but even that is just 9% below 52-week high. Why? Because even Russell 2000, though it does not have mega cap stocks, it is also market cap weighted. So being close to 52-week high does not mean internally it is bullish. We saw, and we may go back, Only 46% of Russell 2000 stocks are up in last 12 months. Not at all bullish, but see, it is only 9% below 52-week high. That is because it is also market cap weighted. NYSE composite, it was not even 60% of stocks up, just 5.38% below 52-week high, and Nasdaq composite was bearish in terms of breadth. More stocks were down in last 12 months than up, that is just 2.39% below 52-week high. What it shows is the market cap weighting is affecting the market in a, you may call, a virtuous cycle. Indexes are up and people are looking at the stocks that are with larger market cap, bigger market cap, mega cap. They are up. People are probably buying those stocks more and the indexes are going up more. And the stocks that are laggard, it seems people are not interested in buying them. Those are probably lower market cap stocks and it is remaining there for the time being, at least. Now index percentage in last 12 months. You will find again something interesting in terms of percentage of stocks up. Dow Jones Industrials was at the top. If I go back, I'll not go through every percentages like that. You can see for Dow Jones Industrials, percentage of stocks up in last 12 months is the biggest number, 73%. Whereas in terms of actual percentage change in last 12 months, it is actually one of the weakest of the major indexes, just 14%, 14.2% up. Nasdaq 100 up the most, and it is the most affected by mega caps, 27%. S&P 500 also hugely influenced by mega caps and larger cap stocks, 24.9%. Much broader S&P 1500 still up by 23.6. Again, all these are market cap weighted. Russell 2000 market cap weighted but only has small cap stocks. Here you can see the percentage up is much less, 8.6%. NYSE composite 13% up, 13.8. Nasdaq composite 30.6% up. Surprising, isn't it? Nasdaq composite is up the most, 30.6. But if I go back, percentage of stocks up in Nasdaq 100 over last 12 months is the worst, 39%. Again, the answer is because that is also market cap weighted. And the average of all these major indexes up percentage gain in last 12 months is quite respectable, 20.4%. Any retail trader trading only stocks without using leverage, if one is able to get 20% return consistently on total capital, I think that is a respectable return. Now compare that with mega caps. Mega caps, percentage of stocks up over last 12 months, of course all of them are up 100%. Let's look at some of the mega caps. Percentage below 52-week high. Apple 1.7%. Again, for many of them 52-week high is same as all-time high. Apple 1.73, Amazon 3.97%, AVGO Broadcom 4.02%, Google 4.36, Meta 6.04, Microsoft 8.08, Netflix just 3.63% below 52-week high, Nvidia 10.39 and Tesla 11.64% below 52-week high. Mega cap percentage change in last 12 months. Apple 32%. Let's avoid the decimals for now. Amazon 45%, AVGO 114%, Google 37%, Meta 67%, Microsoft modest 15%, below the indexes average of around 20%. Netflix 84%. I hope I didn't make a mistake there. For Microsoft, you may check that out. Netflix 84%, Nvidia 177%, Tesla 65%. Average percentage gain of these few mega caps last 12 months is 71.1%. If I go back, average of all the indexes, major indexes, including even the composites, for last 12 months is 20%. Much of that gain came from the mega caps going up first, and then people buying more and more mega cap, large cap stocks, and consequently leading the market cap weighted indexes higher. What does it mean? The indexes are near a 52-week high. For many of them, it means all-time high. However, the market is not so strong internally. If you bought one of those laggard stocks, you had plenty of opportunities to go wrong. Hold the stock hoping it will go up, but it never did. Many stocks have been down in the last 12 months, especially in the broader indexes, Russell 2000 and the composites, and S&P 1500. Mega caps are driving the market higher. What may happen if, or I may say when, nothing goes up all the time, no stock goes up all the time, no group of stocks go up all the time. So what may happen if or when the mega caps start to go down? It could bring the whole market down, meaning not only the market ETFs, but also the laggards may also go down further. That is one possibility. Laggards will also come down if mega caps come down, or a rotation into the lagging stocks may happen. You may prepare, I may prepare for both by creating a list of low risk 360 degrees trades for both outcomes. One outcome is possible shorting opportunity, another outcome is of course possible buying opportunity. And of course, whatever be the outcome in coming days using Q, you can see in real time and sometimes even anticipate which pocket is stronger and weaker, or which pocket is accelerating or decelerating, and find trade candidates at the best possible time. You probably already knew that. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets, using only one trading system that simplifies my life. And as I have been finding out lately, simplicity in life is equal to happiness in life, at least for me. And it is just one aspect, Q, simplifies my life. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and this YouTube channel Trading Profitably. All these are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I use all of them and you will use some of them today also. Let's start with dollar index. Dollar index came to this watermark resistance, pivot resistance in the backdrop weekly chart, went above that and about to create a false upside breakout, but not there yet. Last week it tried to create the false upside breakout, didn't succeed. This week it tried again, didn't succeed, but this week it created a bearish indecision at the top. That and the upper tails tell that it is more likely it will go down from here than not. More likely doesn't mean guaranteed. In the daily, it displayed a bearish headwind, the unique reversal signal. Price came down from there and, as is often the case, retested the level, and here it completed a false upside breakout with another bearish headwind and one bearish indecision at the top. There is a trend line support, but some distance away. Looking at weekly daily, I am more bearish than bullish on dollar index, at least until it goes to the trend line support. If that happens, that may help the market, though that correlation does not always work. Mega cap index hugely influences the market. We saw that in the study earlier. I pointed to the megaphone pattern in the last market recap, that is a uncertain pattern, and that is happening in the weekly interval, that is higher uncertainty, and that uncertainty is added to by the indecision at the top, which happens to be bearish. Trendline support is some distance away. In the daily, it displayed a cluster of indecision at the top that tends to be bearish. I always take a cluster of indecision seriously, and that would be useful because price fell after that, tried to go up but came down again, and now surprisingly relative performance is tilting down, which was not the case earlier. Mega caps were outperforming hugely over longer term also, but at least for last couple of days mega caps are underperforming, not outperforming. Earlier it was outperforming. On Friday it created a lower high, came down with a bearish flow. However, it has a long lower tail and it stopped right at the trend line support. These trend lines work remarkably well, like the other signals. If the trend line support was broken on Friday, I would take shorts in mega caps happily, but that did not happen. Again, this is more bearish to me than bullish, not a time to buy. If the trend line support breaks, that will be more bearish. That was the custom index in Q. Let's also look at the symbol MAGS, the Magnificent 7 probably, MAGS, the mega cap ETF, MAGS. This has a bearish indecision cluster at the top in weekly. I always take a cluster quite seriously. Just by looking at that, I am not going to buy mega caps. Here also in daily, it displayed the unique reversal signal, bearish headwind at the very top. That was all-time high in fact. Price came down, tried to go up, created a lower high and displayed the bearish headwind again. Again it stopped right at the trend line support on Friday. Remarkable, isn't it? If the trend line support is broken, I'll be quite happy to take shorts. And that is why I discussed about the bullishness of the market and the impact of the mega caps on that. I thought that was very timely to discuss today because it is about to break the trend line support on both MAGS as well as Q mega cap custom index. If those breaks, we'll have to see how the market reacts. Of course, the mega caps will be weak. The stocks that went up or ETFs that went up with mega caps will be weak. We'll have to see whether the laggards will find support at that time. But we may be ready with some laggards to see to buy them at the perfect time. Market breadth invaluable in assessing the internal health of the market and anticipating a change in market direction. Lot of signals, the broadest view of the market and a lot of signals on this single chart. We had a long series of confirmed Hindenburg signals. Of course, if you were watching the Hindenburgs over last several months, you know that it is not a signal to take shots immediately. And I cannot help wonder if its predictability about a market crash is as accurate as it used to be earlier. How accurate it used to be earlier? Of course, Dr. Jeffrey Scott had shared that data multiple times, but looking at this cluster of Hindenburgs coming again and again and again, but sometimes it is pulling back, but many times not. It helps me wonder whether it is as effective or not, but the calculation remains the same, and the calculation shows that at this point, actually, some people are selling, some people are buying. That underlying thought of Hindenburg is still true. It comes at a high price level, near or close to all-time high or recent high, 52-week high. Then heavy selling happens from one side, heavy buying happens from another side. So it is safe to assume the heavy selling is not from retail traders like me, it's more from professionals who know that it is time to sell. They have to sell over a long period of time, and it looks like nowadays they are taking much longer to sell before it leads to a crash. That was not the case before COVID. Before COVID, Hindenburgs came and market fell sharply, but that is not happening recently. That's why I mentioned I look at this signal, but this is not immediately actionable. There are other immediately actionable signals on this chart and also in other parts of Q like bucket analysis. In any case, the Hindenburgs then came bingo, not Phoenix. In the last market recap, maybe because of too many coffees or lack of coffees, I mentioned them in the last market recap as Phoenix. It is not Phoenix, it's bingo. Bingo is heavy selling. Heavy selling at the bottom can be a precursor to move up, but heavy selling bingo at the top is not a precursor to market moving up. It is heavy selling, simple as that. After that, price tried to go up. We even had one large accumulation count, but that was a half trading day. That too, it was just before Christmas Day. So I did not put so much weightage on the heavy selling. I did not consider it as bullish as I would do on a day like this, where we had heavy buying, large accumulation count at the bottom after bingo. That was also associated with Eureka. Mr. Iwan Woodward, may him rest in peace, his equivalent of follow through this. That was an accumulation count that was worth using for buying, but not this accumulation count on a half trading day on 24th December. And after that came heavy distribution day. That was a full trading day, Friday. Yes, it is a holiday period, but that was a full trading day. So to me, this large accumulation count on half day followed by large distribution count on full trading day is bearish rather than bullish. Also, if we look at the other oscillators like 50-day moving average, percentage of stocks above 50-day moving average, that is in the bearish territory. Advanced decline, sharply bearish on Friday. up down volume, sharply bearish on Friday. The oscillator that works like a clockwork, thanks to Dr. Jeffrey Scott, from whom I learned to use it, is the 3-month new high low. Every time it hits the lowest extreme, this oversold brackets, it tilts up. Every time it hits the upper extremes, the overbought brackets, tilts down. Happened once again. Once it hit the oversold condition, that was true in the last market recap, it tilted up. It tilted up but feebly and then created a lower high and came down again. Now 3-month new high low is again in the bearish territory. All of these are showing bearishness. Nothing in this chart is showing bullish picture. Therefore, it is not a time for me to buy, cannot be a time to buy. This breadth insight is very useful in being right in the market trading direction. Now I showed this is a daily chart, total breadth, total view breadth. I showed that advanced decline up down volume sharply came down on Friday, and earlier in previous market recaps I had shown that the daily interval had bearish divergence because advanced decline up down volume were coming down while the candle chart was going up. Daily interval had bearish divergence, but if you watched my master classes, I also mentioned in the master classes, the videos, that the bearish divergence on advanced decline up down volume is more effective and powerful and useful and predictive of market move when we find it in the weekly interval. So this week I also created a chart of weekly interval of the total view, and now you can see the weekly interval also has bearish divergence for advanced decline up down volume. That I take even more seriously. So in this chart, the only pertinent part is the bearish divergence. Not all the signals are to be read on the weekly interval, but the bearish divergence is more predictive, more effective, more to be noted on the weekly interval. That's why I shared this chart this week. Again, nothing here tells me to be buyer. If I look at the composites, NYSE and NASDAQ, again, percentage of stocks above 50-day moving average is in bearish territory, 3-month new high low in bearish territory but not oversold. I'll go through the major indexes quickly. Dow Jones Industrials, here 3-month new high low, sorry, percentage stock above 50-day moving average, bearish territory, 3-month new high low, bearish and oversold. So Dow Jones Industrials is oversold from this point. Again, Dow Jones Industrials is the smallest of the market ETFs, just 30 stocks. So these oscillators are to be taken with that in mind. The breadth insights are more useful when they are on a larger number of stocks, not just 30 stocks. So I always keep that in mind when reading the breadth insights on Dow Jones Industrials, smallest one. Nasdaq 100, bearish here, 3-month new high low, bearish and oversold. Russell 2000, bearish, bearish. S&P 1500, bearish, bearish. S&P 500, bearish, bearish, far from being oversold. Together the market breadth is bearish. Yes, some pockets are oversold, but they have not tilted up, and as I mentioned earlier, showed earlier, and as happened in the last market recap also, 3-month new high low was oversold in some pockets, and 3-month new high low tilted up. Yes, candle chart also tilted up, but not many stocks actually went up. So 3-month new high low oversold in Dow Jones Industrials and another pocket doesn't mean I am going to be bullish on the whole market. What is the market external view using ETFs? This week all the market ETFs went up. IWM was the poorest performer, up by 0.21%. QQQ, again because of the mega caps, became the best performer, 0.75%. But over 2 weeks period they are still down. So this week's up move did not make the 2-week period bearish. That means when we read these numbers, we realize that it was actually going down. It made a feeble recovery with lower high and tilted down again. That is how I am reading period 1, period 2, week 1, week 2 percentage changes of the market ETFs, and that is in sync with what we saw in the market breadth charts and also mega cap charts. If we look at the market ETFs, QQQ, the best performer, had a bear release 1 week ago. Now it has a bearish indecision. This week's candle shape is not bullish. Daily made a recovery from 3-month new high low extreme oversold condition, created a lower high and tilted down with bearish flow. If not for the lower tail, I would be happy to short some QQQ constituents or maybe even QQQ. But it did have a long lower tail, so I did not trade QQQ. On Friday it would be on bearish side if I traded it. Did not. There is a trend line support, not far from Friday's low. This chart is not allowing me to be bullish because daily flow is bearish color, weekly has bearish indecision. But the trend line support is not allowing me to short easily. If this trend line support breaks, and I think it will break if the mega cap breaks trend line support, then we'll have many shorting opportunities in the stocks that were at a very high price level. SPY worse than QQQ because here the backdrop color is bearish. QQQ it was neutral. Again, daily chart is similar to QQQ, bearish flow but long lower tail. If this trend line support breaks, I'll be happy to take bearish trades. Dia, bearish flow similar to SPY, seems to have broken the weekly trend line support or just about to break. You can see that neutral color was 3 weeks ago. So it is weakening for a while. The weakening started from a bearish headwind close to the very top in daily. Then came bearish flow, it steadily came down, made a feeble recovery that created a lower high. Friday's candle is indecisive. Again, there is a trend line support. Not very far from Friday's low. If that breaks, I'll be happy to short. Right now, not able to short easily, and of course cannot buy. Weekly color is bearish. IWM again weaker than SPY QQQ because the backdrop color is bearish for many weeks, 3 weeks now. I first identified the shorting possibility when it created a false upside breakout after displaying bearish indecision cluster. That's why I take the cluster seriously. I mentioned about that shorting opportunity at that time. I'm not mentioning it only now. Again, it stopped at a low price level, made a feeble recovery, very much lower high, but Friday's candle is indecisive with a long lower tail. There is a trend line support not far from Friday's low. If the trend line support breaks, it will be quite bearish. Of course, there are other supports, but I'm expecting that if this first trend line support breaks, the immediate one below that will also break. Maybe all the trend line supports will break together or they will all hold together. We don't know which one will happen, but we can be ready with both the possibilities and create some candidate stocks list, candidate trade candidates list. Bucket analysis and sector industry stock breadth using Q edge helps to decide preferred trading direction that may be different from the current market trend. 86% of stocks are below mid Bollinger Band. That is bearish, no doubt about that. On Thursday it was 80%. It became more bearish on Friday. Cannot be bullish with that number. But it is far from being oversold. Not many stocks are below lower Bollinger Band. So this picture is not allowing me to be bullish at all. And if I look at the sector industry stock breadth over longer term period, 1 month period, it's very bearish, of course, looking at just the color. 10-day period was very bearish. 5-day period improved, but then it declined again. This is also in sync with what we saw everywhere else. It seems to be like a case of we are being in a downtrend, a feeble recovery, that is here, then coming down again, that is here. Overall downtrend, we can see that from here. Does not allow me to buy at all, allows shorting. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setup for individual stocks. Weekly interval is bullish. That is in sync with what we saw in Q edge, but I interpreted it as a feeble recovery in an overall downtrend. And though the weekly technical breadth is bullish, daily is bearish, so it is in sync with what we saw in Q edge. On Friday, across the board, all the categories are bearish, but it is not oversold because most of the bearish signals are coming from price extreme middle, not from price extreme low. So this is bearish but not oversold, exactly what we saw from bucket analysis. Allows to short, doesn't allow me to buy. Market level summary then allows shorting only if the price comes down next week, and it will be even more bearish if the trend line support breaks in some or all of the market ETFs. Wherever it breaks, we may focus on that pocket and short that pocket, constituent stocks in that pocket. And if all of them breaks, we'll have plenty of shorting opportunities. Mega caps are largely holding the market ETFs up. If the mega caps break trend line support, that will be even more bearish, especially for stocks rallying with mega caps. You may watch I will watch also if the lagging stocks start to go up if mega caps break support. If that happens, there will be many lucrative, low risk buying opportunities in fundamentally strong stocks in turnaround industries. That's why I'm going to be ready with both possibilities. Review of last week's trade ideas. Only one stock I explicitly mentioned as I was holding, that was Nvidia bearish position. I mentioned earlier I booked profit in some positions in Nvidia and I was holding only a bearish vertical options position. And this is Nvidia's daily performance. This week we had 4 trading days and one day was half trading day. So effectively 3.5 trading days. Over the 4 trading days, it is up, but we can see over 3 to 1 day period it is down. So again, I am interpreting it as a feeble effort to go up in an overall downtrend and tilting down again. This tilt down is showing up here. This tilt up is here. I am continuing to hold the bearish position in NVIDIA. Shall we look at the chart? Why not? Okay, I have the chart actually already prepared and marked. NVIDIA weekly color is remaining bearish. Weekly shape is bearish. In daily, I saw a bearish indecision cluster. I always take that seriously. There was no reason for me to exit the trade on Friday, and it is in an overall downtrend with lower high, lower low. As I mentioned, this was a recovery in a downtrend, then price tilted down again. So I'm continuing to hold my bearish position. This week's trade ideas. I am not very keen in sharing trading ideas this week. One reason is the holiday period, lower volume, and possibly higher volatility, though the volatility tends to be more bearish than bullish now. What do I mean by that? Some of these you can see from VIX, but more effectively we can see it from the holdings performance if you are holding options positions. So on the up days, let's say hypothetically, a position on an up day, meaning when the market is going up, last week several days the market went up, and the week prior to that also, some days market might have gone up. If you see on average, on an up day, you are having bearish positions only and you are losing maybe $1,000, $2,000, but on a down day, your account equity is going up by $2,000, $3,000, $4,000, $5,000. So for every 1,000 loss on up days, you are gaining $2 to even $3,000, $4,000 on a down day. That is showing higher volatility. You could read it from VIX probably, but I have found it is quite effective to read your own equity position and see how they are affecting, provided you are having enough options positions. So that is what I observed. I am having reasonably higher profit on down days than on up days, and that cannot be, I could not explain that only by the movement of the ETFs. It had to be because of increased volatility helping my bearish positions. Positive Vega. I will see if the mega caps are breaking support and if laggards are starting to move up or not, and decide my next trade based on that. I'm continuing to hold only bearish swing trade positions. Only one I shared publicly. I'll continue with that sharing, NVIDIA. Having said that, here is a potential buy candidate. Buy, isn't it? Not short. Potential buy candidate provided, that's a big one, provided the market starts to go up and the stock breaks the next trend line resistance. Why buy? This is yet another example of how I am shortlisting stocks in the long direction even though my market level view has not turned bullish, and that is how I tend to be a little bit ahead of many other traders and yet surprisingly accurate. This homework that I do, easy to do actually. Let's look at this stock, only one stock. Let's look at it from all angles. Let's first look at it using the entry chart, daily. PGNY, Progeny. I think Progeny. PGNY is the ticker. Let me show one thing. Using the Q Elite Performance daily interval. On Friday, PGNY went up by 14.89%, almost 15%. Is it too much of an up move to buy now? No. It went up by 14.89% on Friday, went very much against the market trend, went against very much its industry peers also, as we will see. But it is at a very low price level. What happened at that very low price level? It showed a very lucrative buying pattern. Buying possibility, I should say. I will not say it's a buying pattern. My market view is not bullish. But it came to jump thrust low at price extreme low. Then it kept on displaying. Another came on Friday. Big move up 3. And since the first big move up 3 had come, price could not breach that low. So that confidence I have in the pattern played out once again. Jump thrust low, price extreme low, big move up 3 in a strong fundamental stock. We'll check the fundamentals soon. That was the time to buy. I did not buy it at that time, did not notice it at that time. I found it only during the weekend. It beautifully broke above this trend line resistance, regained the yellow direction line, has a nice trend line support, has bullish flow, had a big gap up. So it could be a flow buy setup, that is trending buy setup. It could be a breakout buy setup. It could be a gap buy setup with many bullish momentum at still a very low price level. So these are the examples of possible lucrative buying opportunities in laggard stocks. This is of course laggard, nowhere near 52-week high. And that is what I am getting ready with some of these stocks. But let's look at it from few other angles technically before looking at it through Vital Scorecard and Edge Industry Scorecard. Let's look at it weekly. Displayed the unique reversal headwind signal. Since then, for several weeks, backdrop remained bullish, and this week it went up. There is a trendline resistance in weekly. The daily also had a trendline resistance nearby. I will be happy to buy if my market view turns bullish. If market view turns bullish, I'll be happy to buy if this trend line resistance in daily is broken. Weekly supports the buying if daily supports it next week. But I also would like to show you the momentum chart, HSI like signals. How many green dots are here? 1, 2, 3, 4, 5 and 1, 6. That is a large number of momentum bullish sign. What are they? PSAR reversal, pocket pivot, MOBO breakout, Kahuna, Bible gap up, Pongo. They are not trade setups for me. The trade setup was in the daily, and there are many signals on the Q entry chart for beginners, sometimes even for me. I suggest looking at the commentary that will read the chart without missing anything, and it has multiple sections. First section is setup, and first is some heading information, which stock, which days analysis, etc. what we are looking at. Then sections for setup, actual trade setup possibility, pattern, and below that will be trend analysis, and further below all the toolbox analysis. Green is bullish, red is bearish. So let's see setup. I showed it already, but for a beginner one might look at the commentary also. It could be moved to another monitor if you are using multiple monitors. I think you all do. It has a possible breakout setup, has a possible float and following setup, has a possible gap setup. In terms of pattern, it is at price extreme low, and it also has a bullish fan out pattern. And I already showed it had jump thrust low, price extreme low, big move up 3. If I further go up, it is now in an uptrend for short-term trading, starting at price extreme low. And toolbox analysis, if you go through the other signals, mostly blue, only it is a bit overbought now. We can see it here, but that overbought situation is normal considering it suddenly broke out with a big gap up and a big move, about 14-15% move on Friday. So with that in context, this is not a concern for me. All others are green, and you can see it is also displaying a squeeze release coming out of a Q squeeze, coming out of a volatility squeeze. So the technicals allow buying for me provided it can break out of this next trend line resistance. What about its fundamentals? Let's find that out from Q Vital real time. Sorry, I was on mute for a while. I hope I covered the technical analysis before muting myself. Let's look at the fundamentals. Sorry about that. Undervalued stock with great earnings quality, a short squeeze potential. Now we can see that this is a profitable company. If I'm buying at a low price level, I like to make sure it is a profitable company. But we can see majority of the peers were down on Friday. And if I go back to Q Edge, of course that was to be expected. Friday was very bearish across the board for stocks, industries, sectors. So I expected the industry to be weak. This was going against the industry, this was going against the market on Friday. If I look at its industry score, again I'll have to take it with a pinch of salt. It is showing strength, showing rapid improvement in score. It is showing sizable percentage up move on Friday, but that is because of that one stock. Even in S&P 1500, only one, that stock PGNY, happens to be a small cap. You can see that from the color code here, background color code went up. So we have to take the strength in industry score with a pinch of salt. This one stock's move made the industry score strong, and that is also the useful feature of Q Edge. We can see whether the strength was broad strength from Q Edge and also from Q Vital. So industry strength was not strong. That was, I mean, overall industry strength that was expected because Friday is bearish. I also looked at its seasonality, one click away. One click away doesn't mean 1 second away. Collecting data from Refinitiv. This is also something I noticed. January has strong bullish seasonality. In fact, the best seasonality for this stock in the whole year is in January, and the earnings is just after January. If I go back, Okay, sorry, earnings is in February, end February. Okay, so in any case, January has bullish seasonality. So because of the market view, my market view being not bullish yet, because the industry internally is not bullish yet, it is not a 360 degrees buy candidate. Even if on Monday the stock breaks out of the next trend line resistance, if the industry breadth does not improve, it will not be a 360 degrees buy candidate. If the market continues to fall, if the market breaks trend line support in many of the instruments we saw, and only this stock goes up, it will not be a 360 degrees buy candidate. And I try to avoid stocks that are going up alone. I like to be with the market direction, with the industry direction. So still I notice this stock because of some lucrative patterns, and if the market turns up, if my preferred trading direction becomes bullish next week, these are the kinds of stocks I'll be happy to buy. And this may happen if the mega caps fall and the lagging stocks start to outperform. Will that happen? I don't know, but I am keeping myself ready. If you carry out the 360 degrees analysis using Q like that, you will most likely find other candidate stocks today, or sometimes trading candidates. Now I rather have candidate stocks, not trading opportunities, because of my market view, just as you would almost any other day. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session that will be in the new year. So wish you a very happy, prosperous new year. And as I always say, as these live examples, I am quite confident shows there is no reason not to do that. Continue to trade profitably in the happy new year of 2025. See you then. Thank you.